Hello, you're watching Economic Outlook here on TVR World, airing from the capital Jakarta, Indonesia, where we are bringing you the latest updates on economic news and global wrap-up of stock market here in Indonesia and around the globe. And also today we'll be speaking to Chief Economist of Bank Permata to get his insights on the latest trend in the country's economy amid global uncertainty. I'm Rahmat Idris. This is Economic Outlook. Two South Korean airlines will serve direct flights to Bali to meet a surging demand from tourists in the country to visit the Indonesian island. Indonesia's economic growth exceeded the expectations in the first quarter. However, the more challenging global situation will make it difficult to maintain such a high growth rate in the rest of the year. Stock prices at Wall Street rose Thursday morning in positive note following the Federal Reserve's latest interest rate decision. On to the first report of the program. Two South Korean airlines, Air Busan and Jeju Air, will serve direct flights to Bali to meet a surging demand from tourists in the country to visit the Indonesian island, according to Bali's airport operator. Handi Heryuditiawan, General Manager of State Airport Operator Angkasa Pura I for Bali's I Gusti Ngurah Rai International Airport, said recently that the two South Korean airlines would soon serve direct flights to Bali, though the starting dates are still under discussion. Handi said that Jeju Air had obtained a permit from the Indonesian Ministry of Transportation to fly to Bali via Incheon and Busan. Garuda Indonesia and Korean Air have so far served direct flights from Bali to South Korea. Ngurah Rai serves 19 domestic routes by 13 airlines and 33 international routes by 36 airlines. In the first quarter, the airport received 5.1 million passengers, a 17% increase from 4.4 million in the same period of 2023. Data from Statistics Indonesia, or BPS, shows that South Korea ranks 5th among the top 10 countries sending tourists to Bali in January to April. Indonesian furniture products displayed during a recent exhibition in Dubai, the United Arab Emirates, have lured many buyers from Middle East and African countries. The Director of Export Development for Manufactured Products at the Ministry of Industry, Dewi Rohayati, said on Tuesday that Indonesian furniture products worth $6.11 million were sold during the Index exhibition in Dubai. The transaction value booked during the expo, which was held on June 4 to 6 at the World Trade Center in Dubai, rose 454% higher compared to $1.1 million in the previous year. The products that were in demand included console tables, chairs, and stools made of wood and rattan baskets, wall decorations, wooden outdoor furniture, decorative accessories, and kitchen equipment, Dewi informed. On the first day of the exhibition, 2 trade agreements were inked between Indonesian pavilion participants and UAE buyers worth $648,000 for a wide range of furniture products. And according to the head of the Indonesian Trade Promotion Center, or ITPC, Dubai, Widi Haryono, he said that Indonesia's participation in Index 2024 was intended to take advantage of the Indonesia-UAE SEPA trade agreement and utilize Dubai as a hub for trade in the Middle East, Africa, and South Asia. And on to the next report now. Indonesia's foreign tourist arrivals have showed a rapid increase during the first 4 months of this year, with the largest number coming from Malaysia, Australia, Singapore, and Timor-Leste. As many as 1.06 million foreign tourist arrivals were recorded during April 2024, an increase of 23% year-on-year or 2.40% month-on-month. The latest tourist data issued by Statistik Indonesia or BPS showed. In its report, BPS said that the number of the foreign tourist arrivals far exceeded the 158,000 figure at the start of the COVID-19 pandemic in April 2020. Meanwhile, the cumulative number of foreign tourist visits in January to April 2024 reached 4.09 million, the largest in 4 years. The number also rose 25% from 2.80 million recorded in the same period last year. Bali's Ngurah Rai and Tangerang's Soekarno-Hatta Airport were the main entry points for visitors using air transportation in April, which contributed 88% of the total foreign tourist arrivals during the month. According to nationality, the largest number of foreign tourists coming from Malaysia, who contributed 16%, followed by Australia by 12%, China 8%, Singapore 7.6%, and Timor-Leste the remaining 5.8%. Moving on to our feature report of the week, Indonesia's economic growth exceeded the expectations in the first quarter on the back of extra spending during presidential elections, Ramadan and Idul Fitri holidays. However, the more challenging global situation will make it difficult to maintain such a high growth rate in the rest of the year. After a solid growth in the first quarter, most economists are pessimistic that the high growth could be repeated again in the rest of the year. In addition to growing tension in the Middle East and high interest rate in the United States, the domestic problems such as a decline in the government spending could slow the GDP growth trend. Statistics Indonesia or BPS reported that Indonesia's economy grew 5.11% year-on-year in the first quarter of this year, exceeding most economists' projection of 5% on the back of the government's extra spending during the presidential elections in February and the sharp increase in household spending during Ramadan fasting month in March and Idul Fitri holidays in the following month. Finance Minister Sri Mulyani is optimistic that Indonesia's economy is on track to meet the government's growth targets of between 5.1% and 5.5% this year and next year despite global uncertainties. Meanwhile, the International Monetary Fund or IMF projects Indonesia's growth rate to reach 5% for both the present and upcoming years. Meanwhile, the World Bank forecasts a slight decline in growth for 2024 and 2025, with rates anticipated to settle at 4.9% annually. However, some economists have said that the rising global uncertainties and the high interest rate will make it difficult to repeat the high growth rate recorded in the first quarter. Indonesia's central bank, Bank Indonesia, unexpectedly raised its reference rate in April to support the rupiah currency, which has fallen to 4-year lows on rising risk aversion and a delay in the expected timing of any U.S. policy easing. The central bank has been intervening to defend the currency, which had fallen to around 16,200 per dollar, the weakest since 2020, and amid risk of sentiment in markets as traders scale back expectations for U.S. rate cuts and worry about tensions in the Middle East. The country's inflation has also been under control since early this year. The annual inflation rate eased more than expected to 2.84% in May from 3% in April, remaining within the central bank's 1.5% to 3.5% target range. Meanwhile, Bank Sentral Asia or BCA chief economist David Sumual has said that the fairly high acceleration of economic growth in the first quarter of 2024 will be unlikely to occur again in subsequent quarters. According to his assessment, in the next quarter, there will be no momentum for the general election, Ramadan fasting month, and Idul Fitri holidays, which contributed to the sharp increase in the government spending and household spending during the first quarter. However, he believed that China's estimated economic growth of 5% this year could help boost Indonesia's exports, which are expected to offset the decline in the government and household spending. David Sumual estimates Indonesia's economy will grow within the range of between 4.9 and 5%, below the 5.11% recorded in the first quarter. Indonesia's economy recorded a solid growth of 5.11% in the first quarter of this year. However, rising global uncertainties could reverse the growth trend in the rest of the year. And joining us today is Josua Pardede, Chief Economist of Bank Permata, sharing with us his views on the performance of the economy amid such an uncertain outlook. A very good day to you, Mas Josua. Thank you for joining us in this conversation. My first question to you, the global economy right now is currently facing a growing uncertainty amidst the geopolitical tensions due to the Middle East war and also the conflicts between Russia and Ukraine. How resilient is the Indonesian economy in facing such a situation?
So thank you. So if we look at the development of Indonesia's economic condition after 1997-1998 Asian financial crisis, Indonesia's economic fundamentals have notably improved. This is evidenced by Indonesia's economic resilience during the global economic crisis in 2008-2009 and the COVID-19 pandemic crisis in 2020-2022. Structurally, more than 50% of Indonesia's GDP is contributed by domestic demand or consumption, which means that external impacts on Indonesia's economy are more limited or could be manageable. Although we cannot deny that there will be impacts from global uncertainty via channel of trade and investment to Indonesian economy, but I think that this impact will be relatively controlled or manageable. The economic resiliency also supported by sufficiently flexible and responsive monetary policy to maintain the stability in the market, and then fiscal policy capability of functioning as a shock absorber.
Right. Indonesia's economy recorded a solid growth rate of 5.11% in the first quarter on the back of extra spending during the presidential elections, the Ramadan month, and also Idul Fitri celebration. What's the prospect here on the economy of our country for the rest of the year?
So in the second quarter of this year, Indonesian economy is likely to continue grow at around 5%. As being supported by domestic factors. So we think that supporting domestic factors include the celebration of Eid Fitri and end of uncertainty related to the elections as the election winner has been announced, therefore reducing the wait-and-see actions from the perspective of investors. The decreasing impact of El Nino and then food supply also keep the inflation more manageable. Challenges will indeed be higher in the second half of this year because the momentum of domestic growth will be limited or mostly coming from regional elections and increased consumption during the year-end, Christmas and New Year celebration. While the external factors, we think that such as the room for global interest rate cuts, especially by the Fed, and then development in China's economy remain full of uncertainty. Therefore, I think the role of monetary policy in maintaining stability to attract foreign flows and fiscal policy related to the spending acceleration become quite important. We still see that Indonesia's economy in the second half will be able to grow around 5%. Therefore, so in the full year of 2024, we project that Indonesia's economy to be ranging at around 5.0 to 5.1%.
Right, quite hopeful analysis there. Ms. Josua, do you think that with such a situation, the government's economic target of between 5.1 to 5.5% this year could be achieved? You mentioned that's around 5% there.
I think it's still possible, but I think it's not easy. Sound and robust domestic economic policies are needed because the global economic condition tends to weaken and remain full of uncertainty. Accelerating the structural transformation and ensuring the new government's program for 2025 could be one way to lessen the impact of uncertainty. So overall, we still expect that Indonesia's economy to grow in the range of 5.0 to 5.1% this year.
Right. Now, from the global perspective, Ms. Joshua, the U.S. Federal Reserve held interest rates steady on Wednesday at the range of 5.25 and 5.50%. And what is the impact of the Fed's high interest rate policy on Indonesia's economy?
So, of course, this would be a challenge for the Indonesian economy, not to mention also this will impact to the financial market because of the uncertainty of the Fed rate path in the future. The foreign investors still concerned about investing to Indonesian capital market. So that's why Indonesian rupiah still currently weakened against dollars year to date. And then the foreign flows still recorded outflow from bond markets and then from stocks market by year to date. So I think not to mention also the room for the BI rate cut this year also will be limited, yeah, because when we back in April meeting, BI meeting, we got a sense from the central bank that BI will not be as earlier before Fed to cut the interest rate. So meaning that Bank Indonesia, I think will have a greater room for rate cut after the Fed decided to cut the interest rates.
Right. And what do you think Bank Indonesia should do, our central government, to respond to the Fed's decisions? And is there any chance for our Indonesian banks to, lower its reference rate?
So I think looking at the rupiah exchange rate situation development, and then not to mention also that the geopolitical tension in Middle East still continue to prolong. So I don't think that Bank Indonesia will do the rate cut before the Feds because it will hamper the rupiah deeper if Bank Indonesia cut the interest rate, because when Bank Indonesia cut the interest rate, so it means that the rate differentials between US and Indonesia interest rate becomes narrowing. So that's why this will lead to the potential of capital outflow. And then a couple days ago, also we heard that one of the big foreign fund also they did underweight rating to Indonesia stocks. So that's why I think those measures, I think the Bank Indonesia continue to support the rupiah exchange rate by implementing the triple intervention to intervene to the market, the FX market, the bond market, and then domestic NDF market. And then Bank Indonesia also continue to attract the foreign investors in the secondary market of SRBI. I think this is very potential because so far, by end of May this year, the foreign investor in the secondary market already booked around 150 trillion rupiah. So this is very hopefully could offset the outflow from the stocks market and then bonds market.
Right.
So in addition to that, I think the government should also improve the investment climate, by introducing friendly policies to the investors.
Yeah, and providing incentives as well, because as President Jokowi said that not only rupiah is currently struggling against US dollar, but a lot of global currencies out there. And Indonesia's rupiah has weakened indeed below 16,000 rupiahs per US dollars due to the high Fed rate. Do you think that our currency can return to around 15,500 rupiahs per US dollar recorded in early January this year?
I can tell you that our expectation and then market expectation shows that dollar rupiah level this year will be maintained around 16,000 level. So we don't see any chance or probability of strengthening rupiah amid the higher for longer US interest rates and then slower for longer also in Chinese economy, and then continuation in the geopolitical tension in Middle East. So that's why we think that the rupiah will likely strengthen in the coming year in 2025, taking into account that the Fed is likely to cut around 75 to 100 basis point next year. So that's why this will lead to the greater room for BI rate cut next year around 75 basis point. So when we assume that expect that PI will cut the interest rate next year, there also will be a chance also for the foreign flows to the market, and then ultimately rupiah could be appreciating around 15,500 to 16,000 level.
Right. Mas Josua, just my final question to you. China's economy has shown quite a strong recovery in recent months. What are the advantages of Indonesia can get from China's rising economic growth? Also to note the fact that our President-elect Prabowo Subianto has recently made a special visit to China, meeting and speaking with Xi Jinping himself.
So in fact, China is a major trading partner for Indonesia. This is indicated that China is, of course, the main destination for Indonesia's export and also one of the largest contributors to the FDI realization in Indonesia. Therefore, an improving Chinese economy can have a positive impact not only on Indonesia's economic growth, but also the inflow of the foreign exchange, which in turn enhances the Indonesia's economic stability, particularly in terms of external sector or balance. So going forward, we would see that the next government policy to improve the bilateral trade relationship with China should be more optimistic, the impact to the Indonesian economy in the medium term to longer term.
Right. Chief Economist of Bank Permata, Josua Pardede. That's all the time that we have for this conversation. We thank you so much for your insights here on Economic Outlook.
Thank you for having me.
Moving on to the next report now, Minister of Transportation Budi Karya Sumadi has unveiled that electric-based mass transportation or electric vehicles at Nusantara Capital City or IKN in East Kalimantan will start operating in August 2024. Speaking in Jakarta on Sunday, last week, Minister of Transportation Budi Karya Sumadi said that it was quite upbeat the operation of the electric-based mass transportation in the new capital city could be launched in August. The Nusantara Capital Authority or OIKN will provide electric buses for mass transportation within the new capital city. Apart from electric buses, there will also be trackless autonomous trains or autonomous rail rapid transit or ART that serve mass transportation in the new capital city. Meanwhile, the operation of flying taxis in the new capital could not yet be realized, as there is no regulation available to support it, the minister added. For this reason, the Ministry of Transportation will not yet grant permission for flying taxis as a mode of transportation in IKN. The Ministry of Transportation has carried out a technical study for the operation of electric public buses within the government's main area in IKN. Based on the study, the ministry has proposed 3 routes which link Park and Ride to the Grand Mosque, Park and Ride to the Botanical Garden, and Park and Ride 1 to Park and Ride. Stock prices at Wall Street rose Thursday morning in a positive note following the Federal Reserve's latest interest rate decision. The S&P 500 notched a 0.85% to 5,421 on Thursday morning, while the Nasdaq Composite rallied 1.53% to 17,608. However, the Dow Jones Industrial Average ticked down by 0.09% to 38,712. Investors were optimistic after the Fed acknowledged that modest further progress had been made towards its 2% inflation target, despite rate hold on Wednesday. The Fed has indicated there will be one rate cut coming in 2024, fewer than 3 cuts previously forecasted. Federal Reserve Chair Jerome Powell said on Wednesday that the United States was seeing a growing economy and strong labor market. Powell claims that the pace of price increases has come down significantly, although the country's inflation is still relatively high. Nevertheless, Powell says the Fed needs more good data in order to be confident that inflation will reach its target. Stock prices dropped at the Indonesian Stock Exchange, or IDX, on Thursday as market reacted Federal Reserve's decisions keep its reference state. The Jakarta Composite Index ended the Thursday session with a decrease of 0.27% to close at 6,381. The downward trend is predicted to continue ahead of a collective leave early next week for the Islamic festivity of Idul Adha. Despite the decline in the main index, foreign investors still recorded net buying of 2.98 trillion rupiah, or equivalent of 183.3 million. The Indonesian rupiah strengthened against US dollar on Thursday despite the Fed's move to keep its interest rate, and the US and Fed's signal that rate cut may be fewer this year than expected. The rupiah strengthened to 16,270 per US dollar on Friday, increasing by 0.15% from 16,295 a day prior. However, analysts have said that volatility will remain high going forward, which may trigger Bank Indonesia to maintain its hawkish stance. And that is a wrap for this week's editions of Economic Outlook. I'm Rahmat Idris. Thank you for watching. Bye-bye.